So the strategy that I'm using to get this set up is called a fair value gap trading strategy. Very simple, very easy, beginner friendly. You don't need to know anything much about trading. Just understand what is fair value gap. So first of all, what is fair value gap? Fair value gap is when you have imbalance, right? When you have a very long candle like this, and there is a gap in between the candles. For example, here I have this long candle, and from the wick of this first long candle, then the wick of this third candle here, there is a space, there's a gap in between. So that is what we call fair value gap. Very simple. So let me mark it for you. Okay, this is what we call fair value gap, right? This is fair value gap. Very nice. Then let me show you another example again. Okay, here is fair value gap. Okay, this is fair value gap. Can you see it? So this is fair value gap. But there's a tool that you can use to get this fair value gap if you don't want to be stressing yourself to mark the gaps. You come here, indicators, just search for fair value gap. Search for fair value gap loss. I'll go look at it here. You click on it, added to chart. You can see it here, added to chart. So you come here. Can you see the fair value gap right now? So without marking the gaps manually, once you use this indicator, you can now start seeing the fair value gap. So the red fair value gap is bearish fair value gap, while the green fair value gap is bullish fair value gap. So this fair value gap actually tells you the direction of the market. If you see red one, that means the market is bearish. If you see bullish one, which is green one, that means the market is bullish, right? Very easy, very simple. Once you put this fair value gap, then you come down here and apply the simple logic that I'm going to tell you right now. So what I do is I look at a very clean fair value gap that is unmitigated. What I mean is I look for fair value gap like this, that price has not come back and enter inside it like this. This is unmitigated fair value gap. Yeah, I look for it. Once I get it, then I look for my entry criteria, which is a breaker block, right? So the first criteria is there must be a breaker block that align with fair value gap. For example, this fair value gap here, there must be a breaker block that align with it, not outside the fair value gap. Like this particular breaker block here is outside the fair value gap, so I will not consider this fair value gap as my setup. So I look for the one that is a breaker block alignment inside it, not outside. So let me show you the one that I execute today. Okay, like this one. Can you see this one? Aha, perfect, perfect. Like this setup that I execute today, you can see I have this fair value gap here, and there is a breaker block, which is this one that align with the fair value gap. All right, so then I wait for price to come back inside the fair value gap, right? Immediately price come back inside the fair value gap, I sell. Perfect, very simple. That's all, that's all, that's all, that's all. You can do your back testing to check, confirm this simple strategy. You're gonna see a lot of it. Let me go to 1 hour time frame. It happens on any time frame, not just 4 hour, any time frame. It happens. It happens. Just look for a very simple fair value gap, very clean, unmitigated. Then wait for price to come back and retest the fair value gap. There must be a breaker block that align with the fair value gap. That's the entry criteria. Like this one here, you can see this is 1 hour time frame, and we can see we have a fair value gap here. But because price has already covered it to the upside like here, so we no longer see it. The tool is no longer showing us. So for the purpose of backtesting, let me draw it. Okay, you can see this is the fair value gap right here, right? Okay, and I have this breaker block. This is the breaker block. Look at the wick of this candle is a breaker block that align with this fair value gap. Let me use my horizontal line to draw it for you so that you can see. Okay, this is my horizontal line, right? You can see, right? So this breaker block, the wick of this candle that form this breaker block, align with this fair value gap, right? So immediately I see something like this, I wait for price to come back into the fair value gap, right? Then I sell down. Very simple strategy. Very simple strategy. Sell down. Yeah, very easy. Very easy. Very sweet. I put my stop loss above the fair value gap like this. 1:9 RR. Very crazy trade. You can see it, right? So very simple. It's not hard at all. It's a very simple strategy. But if you are looking for a strong one, strong fair value gap, strong fair value gap, you use 1 hour time frame and 4 hour time frame. Look at another one here. This is the fair value gap, right? Very wide. Have this fair value gap here, right? Now we have this breaker block that align with the fair value gap. Breaker block align with the fair value gap. Then what happened here? Price come back into the fair value gap and sell down. This is another very sweet setup. Very sweet setup. Okay, guys, backtest this strategy. Backtest this strategy. So put my stop loss here. Right? Very sweet setup. If you are watching this video on my YouTube channel, go to playlist. When you get to playlist, you see Forex mentorship. Right? See Forex mentorship here. Right? You see Forex mentorship. This is my YouTube channel, right? You see Forex mentorship. Can you see it here? Okay, this is the Forex mentorship. So in this video, so look at the free mentorship that I have for you here. You can start from mentorship 1, introduction, mentorship 2A, Forex framework, 2B, Forex framework, 2C. Just sit here and learn. You're gonna really understand how the market works. You're gonna understand how the market works. And if you want to join my advanced mentorship program, then you watch this first video. Watch this first video to understand everything we will teach you in the advanced mentorship program.